The good news is this: heading into 2026, the outlook is constructive, balanced, and opportunity driven, as long as your portfolio stay diversified. Let's walk through what's happening in the economy, the markets, and what it means for serious long-term investors. As we move into 2026, economic growth is expected to remain steady, but not overheated. Okay, most forecast points to about 2% growth, which is supported by consumer spending, business investments, and continued innovation, especially in technology and infrastructure. Inflation has come down meaningfully from its highs, and while prices may fluctuate early in the year, inflation is expected to trend closer to 2% over time, which is important for purchasing power in long-term planning. Unemployment is expected to remain relatively low, meaning the labor market stays resilient, even as the economy cools slightly from its recent highs. So what are some key takeaways? The economy is slowing from hot to healthy, not to recession. Interest rates are another major focus for investors. After multiple rate cuts, the Federal Reserve is now closer to what many consider a neutral rate environment. And that matters because borrowing costs are stabilized, cash yields, they will decline, and bonds are once again behaving like bonds. This shift creates new opportunity for income-focused investors, and it reinforces their role for fixed income as a stabilizer in a diversified portfolio. Stock markets enter 2026 after several strong years, particularly in U.S. technology companies. While earnings growth remains solid, market leadership is beginning to broaden beyond just a handful of stocks. What investors are watching closely is high valuations in concentrated areas of the market, expanding opportunities in mid-cap and value stocks, increasing attractiveness of international and emerging market equities. Global diversification is becoming more important as the US dollar weakens and overseas market trades at lower valuations compared to US stocks. So what's the bottom line? Staying invested in equities makes sense, but diversification matters more than ever before. One of the biggest drivers in heading into 2026 is artificial intelligence and productivity growth. We're moving from early phase to where companies are building AI infrastructures into a phase where businesses are using AI to improve efficiencies, margins, and profits. That shift means opportunity is spreading beyond the mega cap tech companies. More companies are going to benefit from this innovation, and stock selection becomes more important. This environment tends to reward long-term investors who focus on fundamentals rather than short-term headlines. For the first time in years, bonds are back in the conversation. With yields nearing long-term averages, bonds can provide more income, they can reduce volatility, and they can complement a stock exposure. At the same time, holding excessive cash, that may become a drag as these yields decline. For many investors, moving from cash into a thoughtful income strategy can improve long-term outcomes. Another key theme for 2026 is diversification beyond traditional stocks and bonds. Investors are increasingly using private credit, infrastructure, real assets, and select alternative strategies. These areas can provide income, reduce correlation to the market, and offer exposure to long-term themes like energy or technology or infrastructure that are not really for everyone. But when used appropriately, they can strengthen a well-designed portfolio. So what does all this mean for investors? 2026 is shaping up to be a year where discipline matters more than prediction. Diversification matters more than concentration, and income and risk management return to center stage. Rather than chasing performance, the focus should be on staying invested, rebalancing wisely, and aligning portfolios with your long-term goals. Markets will always move. Headlines will always change. But long-term success strategies comes from a clear path, thoughtful diversification, and patience. If you have any questions, about how this outlook applies to your personal situation, that's exactly what financial planning is for. Looking forward to hearing from you, and have an amazing 2026.